If you're leasing a car, there's a good chance you could owe thousands more than your insurance will cover if something goes wrong. And most people have no idea this gap even exists. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Let me tell you about a client who called me last month. Sarah had leased a nice SUV, rolled everything into the lease payments to keep her upfront costs low. Smart move, right? Well, 6 months in, someone ran a red light and totaled her car. Here's where it got interesting. Her insurance company cut her a check based on the car's current value. But because of how quickly cars lose value and because she'd rolled costs into the lease, she still owed $8,000 more than what the insurance paid. That's $8,000 coming out of her pocket for a car she can't even drive anymore. This situation happens more often than you'd think. When you lease a car and minimize that upfront payment, you're trading convenience for risk. And here's what most people miss. Regular auto insurance only covers what the car is worth today, not what you actually owe. That's where gap insurance comes in. It covers the difference between what your regular insurance payment pays and what you still owe on the lease. Think of it as protection for that financial gap. Now, should everyone get gap insurance? Not necessarily. It depends on your situation. If you put money down on your lease, the gap might be small. But if you rolled everything into your payments, including fees, taxes, maybe even a previous loan balance, the gap could be significant. The amount of gap coverage you need changes over time too. Early in your lease, when the car has lost the most value, but you've made the fewest payments, that's when your risk is highest. As you make more payments, the gap typically gets smaller. Here's my advice. Talk to your insurance agent about gap coverage. It's usually not expensive, often just a few dollars added to your monthly auto insurance premium. Some dealerships offer it too, though you'll want to compare costs. And while we're talking about insurance, remember what I always say, shop your policies regularly. Review your deductibles against your current financial situation. What made sense 2 years ago might not make sense today. Think about it this way. We spend a lot of time negotiating the best lease deal, finding the right monthly payment, but if we don't protect against this gap risk, one accident could wipe out any savings we thought we were getting. The bottom line, leasing can be a great option for the right situation. Just make sure you're not leaving yourself exposed to a risk that costs just a few dollars a month to cover. For more information on making smart decisions about your money, visit ronsiegelradio.com. If you want to see how your household insurance fits into your overall picture, head to rsrlinks.com/keysteps for our financial house in order tool. And if you need an introduction to an insurance agent, because I don't give insurance advice, I'm not licensed for that any longer, give me a call. I'll put you in touch with one. Remember, strategy beats rate always. Strategy beats rate always. And I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. That is the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com.